Hopefully you're seeing my screen well.
Yeah, I'm seeing it.
Okay. Hide and remove all the points. So previously we looked at lot sizing, the importance of lot sizing. We looked at margins. We looked at types of margins. Hopefully, you these days which haven't been teaching, you went through them and
Yeah, I went.
you got to know them. But we shall keep on um, things becoming familiar, or when there is move, when you're dealing with the same thing, things become easier. Okay, so today we are going to look at, if you remember last time I talked about a word called leverage. It's what we are going to look at today. We are going to look at leverage. We are going to look at leverage. But of course, this is which will help you to understand, like to have a glimpse of understanding it will give you understanding of what leverage is. But in future there we shall learn how to use leverage in the future. So this is the meaning, but there is a moment of understanding how to use leverage and why is leverage so essential, okay, into our
Okay.
day-to-day trading. So we are going to look at leverages, or leverages. So leverage leverage is the allowance. What is leverage? Is the allowance or allows, is the allowance, or in other terms you can say leverage allows traders, but here it is a definition on my term, is the allowance of traders to control large positions with a relatively small amount of capital. Amount of capital. Um, like the way I explained the previous session, I was like, for example, if you have a $100 account and you want to enter lot 20, and you see you already have there the capital, but they can't accept you to input lot 20, lot 50. Okay, it is a big what? It is a big load. So what allows you to input that big load on that small amount? It is what we call leverage. Okay. So this one gives you powers. Okay. Gives you that allowance. Gives you powers for you to input a big a big load size. Okay, with a small capital on your account. Okay, so by the time you are entering a large position consists of a lot size. So how do you know that this is a large position? By knowing the lot size. Okay, which lot size has somebody input into the trade? So it is the position. Okay, or a large order, a large position, you get. Because the term, as I say, that when somebody says he has placed a large order, it's because you have confirmed for the market to input in that, to execute that order. So it is you who inputted that order. Okay, You are the president, go agambe bachikole, so you are the one who commanded it to input that order. That's where the word orders come in from. Okay, so when somebody says position orders, it is the same thing. So the large position, this large position, in most cases, somebody looks at what lot size do you import. Okay, so in small terms, it allows traders to input a large lot. Okay, or however they have put a small amount of capital. Okay, because it is small, it won't be you can't put a large you can't put a large lot. So what will make it possible for you to put a large lot on a smaller capital? It is leverage. Okay, yeah. So leverage is counted in ratios. Okay, leverage is counted in ratios, and here below are the ratios. Leverage ratios, leverage ratios. So we do have one. Some brokers, like the way you see XNS, XNS starts at uh, 1 to unlimited. Okay, so 1 to unlimited, nebotekako $10, you can enter 10 lot. Okay, but the higher the leverage, the higher the risk. Okay, the higher the leverage, the higher the risk, and you shall understand which leverage are you supposed to use so that you can trade the A book or B book markets. We shall also understand about those markets, about the A and B book markets. They are all markets, but they differ in ways they operate. So we do have also one. Let me first write them all here because we have a little bit many. We do have we do have 1 to we do have 1 to 10, 1 to 20, 1 to 50. Let me go to XNS. I just pick them the way they aligned them properly. I just bring in a picture here. We just look at those leverages way from the database of so hopefully you know right now how you can access them, or Sicho. The same way we were setting up the account 30. Let me just put this 14, 21. Okay, let's go to settings. Okay, let me set a little bit here. I'm gonna bring it here so that we see though how leverage is. Okay, so let me go back to accounts. I take a screenshot so that we see this leverage. I'm gonna pull it to there. Okay, let me go here. Where should I put it? Okay, okay, let me delete this. I bring in the other one.
Wansesezza Joe agambye mbogenda kumpa akazinda okusomesa. Ati negamba onooba musomesa ki?
Anti,
Buli kimu nno.
ebbugumu lyabadde lingi ng'oyinza okwagala osoma ne tubeerawo ne nkuwa akazindaalo instead gwe n'onsomesa. So here is the leverage, leverage ratios. So what do they bring in here? So we do have from unlimited. This is an XNS one, XNS. We do have one unlimited up to 1 to 2. So what do they mean here? That if you have 1 to unlimited, you are capable of doing anything with a small lot. Okay, it can give you powers unlimitedly. You don't have tolina komo. Okay, unlimited means tolina komo. Okay, it is unlimited. You are going to use your account like the way you want, even if you have $1. Okay, they will give you power. Okay, like you be like somebody who has 50 billion dollars with only 1 to unlimited, yet you have an account of $1. Okay, but of course remember
Yes,
the high. Yes. Hmm? But
like you can use that one that's unlimited for different positions you're placed in also.
no, we are understanding what is leverage. Okay, it is allowance of traders to give you uh to give you powers to trade high positions, but it's not the way we are going to do it. Okay, we are understanding how this system works, but it's not the way we are going to use it. We are going to redefine in accordance with the system, the way the system of trading is, to get out something that we follow on to under risk management and understanding how the market goes through market analysis. Yeah. So I'm showing you that, because when we reach a moment to understanding A book and B book, you'll understand that when you are above 1 to 600 to unlimited, you are in a dangerous area. Those, they can do anything to blow your account. The what? The brokers. Okay, they can do anything to blow your account. So it is much better you be at least your maximum to be 1 to 500, 1 to 200, 1 to 500. In future, that's what we shall learn on to. Okay, but here we are understanding these leverages, the powers that they have. Okay, so 1 to 2, they give you at least times 2. Okay, times 2 of that. So this one they give you times 20 your account. So if you have a $50 account times 2, of course you are like you have $100 account. Okay, to 20, like they times it 20 times. So as if you have 100, that means times 20 times 100 times 20 times, that's almost 1,000, right? Is it 1,000, 2,000, like that? So they multiply,
2000.
they give you times. So here they 2,000. If you have $100 account, hmm, they will give you powers times 2,000 times. Okay, so that means you'll be at as if you're having an account of 200,000. Okay, now imagine you have an account of 200,000, yet you have only your $100 account. So it comes out with the what? With the leverage. Okay, it gives you powers as you hold you input in a position, then they give you powers as if you have a big account. Okay, this is where it happens. But remember, as I said, the higher the leverage, there is a market you are going into. We do have markets like A book and B book, of which I'm not going to teach right now. We are going to learn them in future there. Okay, because it is a session of its own. Okay, hopefully you have understood what leverage is.
Yes.
Okay, so please, you write, you I'm send this in your in the channel. Okay, so that Let me send it right now, I think. I'm gonna send it in the channel so that you'll be looking up onto it. The leverage, understanding leverage. Number two, let's look at, so we are done with this. Let's go to something else. How we have looked at ratios and what leverage is. So let's go and look at understand, sorry, let's look at benefits of leverage. Benefits. How would you benefit from benefits of leverage? Remember, these brokers, when you lose money, they are earning money. Okay, so you have to be such a keen person. You fall under, you also try your level best not to do what, to be on their side, because everything they put, they show you as if it is good for you. Okay, but they are there for also, for them also to make money by you losing. So they have to bring in a system that makes you maybe lose money. So sinti buli kimu kyolaba olina okibuukira, you have to also understand the system, how it goes. Okay, yeah, that's what we are learning, so that to falling on the other side, bad side. So we also have this, uh increased, sorry, these are the benefits: increased trading power. We do have increased trading power. We do have potential for high returns. Potential for high returns. I'm gonna explain that. Um, Another thing is flexibility. Flexibility in a trading strategy. A trading strategy. So what do I mean here? Like for the increased trading power, I have looked at it. I explained it before, so I don't need to explain it again. Potential for high returns. Remember, if you have a small account, and you don't have this leverage, you may enter a small position. Okay, a small position. Let me say your account initially allows 0.01, only one position. Okay, which may not give you much returns. But if you have leverage, it will give you power for you to enter a little bit of a large position, so that you can potentially have high returns in profit side. Okay, yeah, that is the use of leverage. At least your return will be a little bit big. Flexibility, at least you'll know when you have that such a strategy, whereby you're going to tap there are what we call sniper entries, which we will learn in future. There, sniper entries, whereby you know very well that this trade is going to give me a sniper entry. You have your $100 account. Why can't you enter lot 10? You know, lot 10 on $100 account, it is a big, big, big,
Very big.
big lot. Yes, a very big lot. But you couldn't enter if you don't have that leverage. Okay, so it makes things flexible onto your side, so that you can enter that position, then you dump it. You dump that. So this is what it brings. So another thing, I shouldn't always speak onto the good side, but also you have also to know the bad side. Which are the bad sides here? Risks. It also, this leverage also applies to risk management, which we shall learn later. Risks of leverage. Risks of leverage. We do have one. Amplified. This is number one. Amplified potential loss. potential losses. The way you amplify the wins, okay? It's the same way you can amplify your losses. Increased risk of margin call. You get increased risk or to a margin call. They may, because the way you see here, I know you are such a girl that doesn't want to listen about losses. Owulira nga kikugamba muli naye bannange losses ezo lwaki tazireka. But the real part is risks. We make risks, and risks can result into wins or losses. Okay.
So just while watching neighbors side, you said when we were looking at margin, you said that when you have leverage and you make a profit, your margin increases. And if you make a loss, the margin reduces.
So what is a loss? A loss means a deduction of your money on your account.
Yes.
So that means everything's running low.
Yes. Not that if at all you've made a loss, that you've not made a profit, and yet you had gotten leverage. That meaning they'll have to, the brokers, they will have to compensate for the money.
Which money do they compensate for?
The one they gave you. The leverage.
Not really. No, that's not how it is. That's not how it is. Already.
Looking at it like no one again than Rahuola said. Kati mubanga tosobodde kuzaayo ezisente obeera olina ozisasula
kati ffe nga woolaba nti ziri it is already like nga it is like this. When you put in $10, it is delivery. It is a kangambe. What word did I use? Nagamba guba musingo gwoba otaddeyo. Okay, to make for example you're sure nti this trade is gonna work out, so gwe guno omusingo gwe ntaddeyo so that munsoboseze okutradinga. But if things go wrong, they are going to take that money, so everything gets mubeera okay with it nti everything goes to zero, that you need to fund again oteekayo omusingo bakuwa obusobozi okukola ki okutradinga. But it's not like they have to compensate it like the way we understand it in our way here. Okay. Yeah. Nti woba otaddeyo, you're aiming at risking. Here you're understanding the system, how it does. N'ebyo ebigambo ebibeerawo kitegeera. But sente z'oba otaddeyo, it is valued at what is already there. Ezo ndigits z'olaba. So if you make profits, sente zo zijja sigalayo. They will just get a commission through spreads and commissions, and wokola amagoba, all your money, the $10 and the profits will be yours. Yeah, okay, will be yours. Yes, and amagoba ogaga closing at nezisigalayo zonna, as long as you haven't withdrawn nga zikyali mu trading account, all the money gufuuka musingo. Have you understood that? Okay. If you had deposited $10 on the account, you've placed in an access to an access to allow you to trade. Okay. But if you make profits, the profits are added onto your capital that will help you to trade more. Okay. Yeah. So we do have these amplified potential loss. Like the way you amplify, you input in leverage and a big lot. The bigger the lot, the higher the returns and the higher the loss. Okay. So it is up to you to input risk management rules, okay, of which we shall see. So increased margin call, of course, that also amplifies. Sorry, that also goes to what? To sellers. So imagine you have $10 account and you put in a lot one, and that means the margin will be low. So you'll have maybe to deposit again, something like that, because already otaddemu load size nene, so the loss mate loss ebejja kukola kyebajja kuba ekuyingiramuko, but we shall know how which right leverage we shall be using, and what we shall be doing, so that we get something that is on kyetusobola okufunamu kasente ekiriwe good towards us. All right.
Okay.
Don't get scared, because I have to tell you the truth. Tegena. Truth will make you peaceful. Otegere industry josem.
naye wemba mmaze okuyiga bino ebintu nga ddala neekakasa, the first at least 3 trades I'll do. Jazikola nga ndi naawe sigwa mu.
Of course, was that's why I said you need a maximum of 2 years with me when we are doing everything. Then the rest of the rest, when I'm following up otandika okikola weka, then when I'm following up on you, so that otuuka ekiseera nga you no longer do what need me anymore when I've already shaped you up. So let's look at best practices. Number one, understanding leverage, understanding leverage and risks. Okay, so you should not go blindfolded into something kyotamanyi okitegeera. Ojja kugwa mu kinnya ng'olowooza bino binya bya bulijjo, kumbe wansi waliwo you may go thinking that this pit is a normal pit. You fall into it, yet down there spears. So this is this is a good example for me to bring in such a statement into understanding leverage and risks. So you have to understand, okay, before doing something. Okay, set proper leverage. Set proper leverage for your strategy. And please make sure these things should be in your head. But everything, most of the stuff that are said, okay, you just know that you have to do this. You'll find that for example, a doctor can go to schools and they give him, he writes down notes worth 300 pages in a book, okay, but imagine what he or she is studying is just to how should I say it, okutunga ekiwundu bakiyita batya, how to dress a wounded part on the body, okay, yeah, how to dress it,
It's the what? Dress.
how to dress it back when it is torn, how to put it back to dress it up so that it heals. You find that they go to school and learn a lot of things, over 600 pages in a book, but when they come into real life, it is something simple. That what they went through to getting to that level, it is what matters. Okay, so this is what we are into. We may see things are many, but the more you keep in, the more you go, you will find that in real life things are simple. The simple life that you find in the future, it's what is brought on social media. But behind that, good life you're seeing, there is torture that you're seeing
It's a
right
lot of
now.
hard work.
A lot of hard work, yes. A lot of hard work, a lot of reading, a lot of sacrifice that has been made behind that great, that simple life you're seeing. Okay? Yeah.
I understand.
So maintain, another way, maintain a sufficient account balance. Account balance. So by you understanding the leverage and your strategy and risk management, you will be in position to input a rightful lot size towards your account balance that you have. Okay. Mm. Mm. Let's continue. We do have also what we call a use of risk management techniques. Use of risk management techniques. 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 Okay. So these are jachila about risk management. Chitambulamu leverage. Most of these stuffs we are going to use them. Okay. Risk management, leverage, lot sizes, brokers. We are going to use them. But before using them, we have to understand. You have to understand which proper, as a doctor. You have to understand you have to understand and differentiate between a pair of scissors that works in two different sections. Steged. Yeah. So these are the best practices. So let's for today I wanted to stop onto this so that you go and practice. You go look into this leverage. For now, you can go to XNS where I told you the cassetting bar. You remember
Yes.
that cassetting bar? Then you tap there, you will see the leverages all written there. So they are not there for decoration. Okay, they are there for a purpose, and the purpose which we have gone through today. Okay.
Okay.
Yeah, so the next session will be understanding the time zones. Understanding the time zones. Okay. That's the next session that we shall have. So today I wanted us to learn about leverages. So I think the 30 minutes are worth it. Let's have a good evening, sister.
Thank you, teacher.
Okay.